Buying your first home can feel overwhelming, but it doesn't have to be. On today's video, we're going to do a step-by-step breakdown of 7 things that you need to be mindful of when it comes to buying your first home. So this way you can be confident, you can have clarity, and most importantly, a peace of mind. So come with me, we're going to head over to the whiteboard. All right, guys, so we're going to head over to the whiteboard and I'm going to help break these steps down for you. You're going to love it. So today we're again in the office, guys. Officina. That is how you say office in Chinese. No, I'm just kidding. I know it's really German. No, I'm kidding, guys. I know it's Spanish. Okay, I'm just a little bad humor there. ¿Dónde está biblioteca? All right, anyway, back to stick to your day job, Kerry. All right, guys, so we're going to break these 7 steps down of how to buy a home. So let's start with step 1. Know your budget. Guys, you have to know your budget. That's so important before you even get out into the marketplace and start shopping for a home and looking at homes and driving in neighborhoods, even calling a real estate agent. You've got to know what your budget is. What is that monthly payment that you need to make sure you're comfortable paying? Because at the end of the day, you're the one living in the home. You're the one paying the bills. So make sure you're not overextending yourself or maybe even falling yourself short, right? You need to make sure that you're comfortable with that monthly payment, even understanding what all goes into the monthly payment. What all goes into the monthly payment is your principal and interest. That's your bank loan, as I like to say. Your real estate taxes, your homeowner's insurance, your PMI, if you're putting less than 20% down, even your HOA, CDD fees. So that monthly payment, guys, can add up really quickly, and you want to make sure you know your budget. A lot of people sometimes use their benchmark as what they're paying for in rent, right? So whether they're paying $2,300 a month, $2,800 a month, they're comfortable with $3,500, whatever that is, you want to make sure you understand what that payment is going to be. So I like to say you want to know what your payment you're comfortable with, and then also what's your max payment comfortable. So you may want to keep the payment around $2,500, but you may say, you know what, but we're comfortable going up to $3,000. If we find the right home in the right neighborhood, it has everything we love, bedrooms, bath, the wife falls in love with the kitchen, the whole shebang, right? The whole shebang. You may say, hey, you know what? We want to go to that little bit higher payment. So know what you're comfortable with, but also know what your maximum threshold is, guys. And that's really, really important before you actually start getting out into the marketplace and shopping. So that's going to be a very important step 1. Let's move on over to step 2. So step 2, we're going to talk about getting pre-approved. What does that even mean, getting pre-approved? That means you are working directly with your loan officer, lender, bank, Keys with Kerry, right? You're working with us and we're getting your application taken. Your application is going to be reviewed and then we're going to move forward with it. But let's really take a moment and break this part down, because if we don't get the pre-approval right, then we will have a weak foundation and everything else will crumble. So we want to really make sure that we get you properly pre-approved. So Kerry, when you say properly pre-approved, and you've heard me use that term before, I'm going to break that down. So the first thing we need to do is get your application completed, again, with your lender. Getting that application completed. In the business, we call it the 1003. So if you're working with your loan officer or bank or credit union, you say, hey, I need to take my application, I need to take my 1003. They're going to say, how'd you know 1003? Say, I've been watching Keys with Kerry, so I get all my good content information from, okay? Make sure you let them know. It was me, anyway. Okay, so get your application completed, okay? That's step one. Step two is making sure that you submit your documentation to the loan officer. And really within the application, you know what? I'm going to back up for a second. When you have the application done, you really want to ensure that you have your buyer's consultation call. Guys, I know that's chicken scratch, but Angel's going to add captions in so you'll be able to keep up, I promise. So you want to have your buyer's consultation call. Why is getting the application completed, then followed up by the buyer's consultation call really important? This is the time for you to share the good, the bad, and the ugly, if you will, with your loan officer. This is the time to get everything out on the table. We tell our clients, guys, tell us everything. Tell us everything outside of the fact you're trying to commit fraud or something crazy, right? But tell us everything. Tell us what's going on in your financial life, monthly payments, obligations, things on your credit, situation with your job, you're possibly transferring jobs. Get everything out in the open because it will come to light. So we might as well be proactive, strategize up front, and make sure that all comes out on our buyer consultation call. Now, after the application is completed, the buyer consultation call is done, we're going to now move on to what we call as part of the pre-approval process, the lender is going to review what we call the 4 C's. Let me share with you guys what I mean by the 4 C's in the pre-approval. So we're going to stay right here. The 4 C's. The first C is going to be cash. Okay? Now we know buying a home is a big financial obligation. Even if you're using down payment assistance, you're still going to need funds for the transaction itself. Down payment, closing cost, earnest money deposit or EMD, home inspection. You're going to need an appraisal. These are all going to be upfront costs, guys, that you need to know that is going to be costs that you have to be able to cover. Right? So making sure you let your loan officer know, hey, where's the cash coming from? Is it your checking account? Is it your savings account? Is it coming from your 401k? Is it coming from your IRA? Is the money coming from a family member? Is it a gift? Is it mattress money? You want to let your loan officer know right up front, hey, this is where the money's coming from, and discuss that up front. I've had clients who've had cash and they need to go ahead and get that cash to put in the bank. It's something called seasoning and sourcing. Some of them are getting it from parents. So we need to know there's a paper trail that needs to take place. So there's compliance rules that we have to make sure that we're adhering to when it comes to where's the cash coming from. So second C, yep, you guessed it, credit. Now, why a lot of people get caught up with the credit score, Kerry, I got a 680, I got a 790, I got a this or that. That's great. We want to hear the credit score, obviously, it's important. But within the credit is also going to be the credit report. What's the meat and potatoes on the credit? What's the payment history like? Credit card utilization, monthly obligations. Do you have student loans, car payments, these things, right? So more than just the credit score, guys, we're also going to be looking at the credit report itself. And obviously those two things are going to work together. The third C is going to be capacity. Capacity just really is another word for income and employment. What does the buyer do for a living? How long have they been on their job? Are they hourly paid? Are they salary? Are they commission based? Do they get overtime? Do they get bonuses? Calculating that income is so important. This is a part, guys, as much as we pay attention to cash and credit, this actually is a part where I really extra hone in on, and we do a lot more research when we're working with the client. Why do you say that, Kerry? Well, because I've seen loans go south really fast by not qualifying, not using the proper qualifying income. I'll give you guys an example of a situation that happened. I have a doctor that I used to do all of his loans for him. And one day, one of his staff, one of his nurses came to him and says, hey, I'm trying to buy a house, doc. but I'm only pre-approved. This was in the St. Pete area for like 250,000. She was really discouraged because she couldn't find the home that she was looking for at that price range. Okay. And so at that point, he said, you know what? Why don't you contact my guy, contact Kerry, and let him see what he can do for you. So she reached out, and I actually was able to get her application and go through those motions and financial strength and XYZ. We were able to do that. When I actually reviewed all of the financials, come to find out, we were able to get her qualified for a $325,000 home. That's a huge difference from $250,000 to $325,000, right, guys? So the first question she asked was, Kerry, like, how is that possible? I went to my credit union. They told me I was qualified for this much. Now you're telling me that I qualify for this much. Had I not gotten a second opinion, I would have settled for a home maybe in a neighborhood or a type of house I didn't even want. So what was the difference? It was right here. It was with her qualifying income. Understanding how nurses get paid and the breakdown with shift information and overtime and bonuses and stuff like that. That other lender wasn't counting all that income because they weren't sure how to calculate it. Not to mention different programs have different qualifying criteria for that income, right? So not all programs are created equal, and not all programs qualify income based the same way. Your lender needs to understand these things. I'm even going to go as far as saying, guys, you need to know when you are pre-qualifying a lender, even whether you're working with a credit union or wherever. Let's say you're watching this video outside the state of Florida, which I'm only licensed in Florida, okay, and I can't work with you directly. You need to ask your loan officer, how long have you been in the business? What's your experience look like? What are your working hours? How many lenders are you qualified? Are you retail? Are you wholesale? I don't want to go too much in a tangent about that, but you need to be mindful of that as well too, because that loan officer experience and knowledge can really take you a long way. But in that girl's situation, in that young lady's situation, we were able to get her pre-approved for the home she did love, and guess what? She didn't have to settle for that other home that she didn't like. So really important that we get that correct. And the last C is going to be collateral. What do I mean by a collateral? Collateral means the type of property that you're looking to purchase. In real estate, not all homes are created equal, meaning a single family home is not necessarily financed the same way as a manufactured home. Guideline for guideline. A single family home might not be looked at the same way as a condo or a mobile home or a townhouse. So it's really important that you guys express to your loan officer when you're going through the pre-approval and you're talking about the 4 C's. And if your lender is not talking about these 4 C's with you, that should be a red flag. Also, if your lender is not asking for your documentation up front as part of the pre-approval, that also should be a red flag. Okay, so that tells me they don't know maybe what they're doing. I don't know. Anyway, so collateral, just letting your loan officer know what type of property that you're looking to purchase. Hey, I got my eye on a single family, or hey, we're solely on condo, or we definitely want a townhouse because we don't want, backyard or cutting grass or, more, whatever the case may be. So make sure you're really upfront. And it's okay to change property types during your pre-approval. Just make sure you communicate with your loan officer. Hey, I know we said we started off with a single family home, but the wife and I has had to change our heart. On second thought, we really want to stick with a townhouse. Okay, cool. So make sure your loan officer updates your pre-approval. Make sure those guidelines are working for you. All right. So that is really part of going through the process of getting properly pre-approved. We're going to go ahead and move on to the step number 3. Sorry, step number 3. My Q-man had to let me know. Step number 3. Okay, so step number 3, picking the right realtor. And this one is pretty easy, guys, so I'll kind of speed through this one. But you really want to make sure that you're working with the right real estate agent, an agent who is kind of vibes with your personality. You have a good connection. You want to know what their work experience is like. How long have they been in the business? What are their work hours? Or do they only work weekends? Do they work based on your schedule? You really want to know that step 3 is picking the right realtor. Picking your realtor. And again, those qualifying questions that I kind of mentioned to you. Just because someone's brand new in the business doesn't mean necessarily that they're bad, because they could be supported by a bad team. And just because they've been in the business a really long time means that they're going to be a good match for you. You've got to kind of do your research and see what's going to be the best right fit for you. Just because your cousin just got out of real estate school, is it the best person to maybe hire? I don't know. So just be mindful of that. That's step number 3. Let's move on to step number 4. Step number 4 means to, when you're looking at, now that you've gotten pre-approved, right? You've shopped your realtor. Now we're actually starting to get on the market. So in the words of Anakin Skywalker, this is where the fun begins. Okay? From all my Star Wars fans out there. Anyway, so you're going to do, obviously, the part we've all been waiting for. We're going to be home shopping. Yay! Home shopping. Okay, so you're on the scene, you're looking at homes, you're shopping within your budget, you're shopping within your price range. Best practice, when you find something you like that you feel that you're going to put an offer on, that's when your loan officer needs to be involved, right? Hey, Kerry, what's the estimated monthly payments on this home? You want to know what kind of monthly payment, guys, you're looking at before you make an offer, right? That's from experience. You'd be surprised how many sometimes realtors put in an offer, and when the client finds out the payment on the back end after they put an offer and I run the payments, I'm like, yeah, here are the payments. They're like, oh my gosh, like this is too much. So we want to make sure that we know what that monthly payment is going to be like before. Now, it won't be to the penny, okay? That's why it's called an estimated monthly payment, based on rate, based on homeowners insurance, XYZ. So there's still going to be some factors in it that have a little play, but we should have somewhat of an idea. But once you find that home, you understand that monthly payment in, you're going to go ahead and put that offer in. Now, one thing I'll share with you guys too, when you're shopping for homes, and again, if you're a first-time home buyer, you want to have something that we say your must-haves compared to your wants. I want to encourage you guys that, remember, this is a starter home. This is not your dream home. We're going to get you to your dream home one day. But don't cut your nose to spite your face, per se. Know what are if you've got 10 things that you really want to see in a home, know what your top 5 or 6 are. What are your non-negotiables from things that you can kind of have a little bit more flexibility in. Understanding that, again, it's your first home. It may not check every single box, but it is going to get you in the right direction to own home ownership, building equity, and getting you that experience. So that's step 4, home shopping. All right, so let's move on to step 5. Step 5 is, once you found your home now and you've made an offer and the sellers have accepted your offer, yay, you're under sales contract, or under contract as we call it. What's going to happen at this point is things are going to move really fast. So making sure you're being close to your real estate agent, making sure you're working closely with your loan officer, even knowing who the title company or attorney is involved in the transaction is really going to be important, because things are going to move really quickly, guys. So the first thing that your real estate agent is going to ask of you to do, once you go under contract, let me right here, under contract, so we know where we're at. Okay, under contract, is going to be your EMD, or earnest money deposit. So in order for the seller to take the property off the market, you've got to put a deposit on that home. Remember I was talking about that earlier, guys, having make sure you got some reserves and some cash. You've got to have that EMD. Normally it could be 1 to 2% of the sales price. So for you guys at home, and you're like, well, Kerry, what does that number really look like? Typically it's going to be 1 to 2% of the sales price of the house, okay? So if you're looking at a 300K house, 1% will be 3,000, and then 2% will be 6,000. 6,000 maybe on a little bit higher side, but again, it depends on how many people are looking at the home and how many people are being competitive against that property. But that's typically where you're going to be at, 1 to 2%. The other upfront cost when you're under contract is going to be your home inspection. And this is something you guys want to make sure you don't skip. Could you buy a house without a home inspection? Possibly. But you don't want to skip that step. You want to know exactly what you're buying. Even if it's a new home, even if it's a newly manufactured home, you want to make sure that you are having a good home inspection. Don't skip that step. And the last one is going to be appraisal. What is an appraisal? So an appraisal is kind of similar to a home inspection, but the appraisal is really more to make sure that the value of the property is in line with the contract. So again, an example: $300,000 home. You're on a contract for $300,000. The house should be worth $300,000. That appraiser is going to get that appraisal done and let you know that it's worth that. Okay, so don't skip the inspection and make sure that you understand all three steps of this process. Let's move quickly on over to step number 6. Step 6 is when you go on the contract. We've done those inspections. We've done that. Now your loan is in underwriting. This is where an actual human being, an underwriter, will be reviewing your financial application, your 1003, your credit. Where's the source of down payment? What program are we doing? This is I like to call it the moment of truth part of the transaction, if you will, especially on the lending side. It's great that we got you properly pre-approved, but this is where we know, is the loan actually going to be truly approved or declined? Now, if you're working with someone who's knowledgeable and experienced and cares about you, you should know, we should have already known if this loan was not going to get this far, okay? Because we don't want you wasting all that money up front, in my opinion. So in underwriting, the loan is going to be approved or declined. For this case, let's obviously move forward with the loan being approved. Once it's approved, we're going to have something called conditions. What are conditions? This is basically another term to say your follow-up needs list. Like they need additional pay stub, there was something on your credit report, they need a letter of explanation, they need additional bank statement, maybe a letter from your job. So there's always going to be additional documentation when your loan is approved in underwriting. What the loan officer, the team, title company, processor, we're all going to work quickly to get all those conditions cleared, so then we can move forward with the next step. So you want to stay really close to your loan officer and your team, definitely at this point, because once the loan is approved, we want to work to get those conditions cleared. All right, guys, and here's the last step. Step number 7. Final approval. And the 3 greatest words in the business: cleared to close. Hooray! Your loan is officially cleared to close. Your loan is cleared to close. Okay? And now it's time to schedule your closing date. So you're going to want to make sure you understand your final numbers. How much is your cash to close? When's the closing date? Making sure that the buyers and the sellers are all on the same page still. Nothing has changed in the contract. XYZ. So that's going to be step 7. Final approval and clear to close. This is the celebration, guys. This is what we work so hard for. This is why we are so passionate about what we do, is to get you to this point, guys. I can't tell you how many families we've helped, how many little kids are at the closing table and they're crying, and it's so emotional. It's so emotional, and it brings such warmth to my heart to be part of that. I try to attend as many of the closings as I possibly can, because I know this is what we work so hard for. This is what you've worked so hard for. This is your dream coming true. And so we are so excited to be able to share this moment with you as well too. And so we want to make sure that you guys are always fully supported. Hopefully this video gave you a lot of insight and knowledge into the home buying process as well too. I have a quick bonus that I am going to share with you guys too. And the bonus is actually this. When you close on your home loan, you get a nice little treat. Kerry, what's that treat? Well, you get to skip your first mortgage payment. Isn't that nice? So let's just say, as an example, because mortgage interest is paid in arrears on a mortgage loan, let's say you buy your home on January 15th. Normally you would think, well, unlike rent, your first payment's due on February 1st. Nope, not with a mortgage. If you close on January 15th, your first payment won't be due until March 1st, because when you pay your payment on March 1st, you're actually paying for the interest of when you lived in the house in February. Does that make sense? So it's a nice little treat. So you think about that's a little gift back for you to help you with moving expenses and so on and so forth as well. So guys, again, we really hope that this video was a blessing to you. If there's anything that we can do to help better serve you, educate you more, please like, share this with someone who you think might be benefit from from this video as they look to buy a home. So thank you. Until next time, we appreciate it. Keys with Kerry.